Well, you just stay right in there. You can probably hear what's going on if you're interested in doing that. Happy Tax Day to everybody. I know everybody's enjoyed writing their checks today, and so welcome to the 45th Annual Stockholders Meeting of the First Bank and Trust Company. We're going to start this off a little bit. If you could listen maybe to a few of the introductions. Our board of directors maybe needs no introduction to most of you, but maybe to some of you do. Ron Baird, where are you? If you directors will stand when I call your name, then you can sit back down. Ron Baird out here. Ron Baird, he's a Virginia Tech graduate, and he started his career out in Omaha, Nebraska at a meat company out there. Then he came back here and he opened a Barrett Farm Supply. And I always say about Ron, whether you came in a Barrett Farm Supply to get a pound of beans or $10,000 worth of fertilizer, you got treated the same way. And that's customer service, and that's what we concentrate here at First Bank and Trust. And Bill Hyder, where'd you go? You're out here somewhere. And, of course, Bill probably needs no introduction to most of you. So he's, of course, also a Virginia Tech graduate. He's a cattleman and raised on a farm. And of course, he was our First Bank CEO because he got on board with Smiley Ratliff, who started this bank 45 years ago, and John Meade, and Bill got hooked up there and took it to its greatness. Mark Nelson, he's not a Virginia Tech graduate. We forgive him, though, for going to Emory, and he did good up there. And Mark, where are you? I guess a few people know you anyway. Mark's a CPA. He started his career at Charter Federal, and he's been CFO here at First Bank for 14 years, and now our CEO for the past few years, and doing a great job also. Sophie Chafin-Vance, she's also a Virginia Tech graduate over here in the yellow dress. There, you don't even know how to stand up, Sophie. And there you go. She's also a cattle woman, and she's the only member of the board that's a mom. So she's also their branch supervisor for all the branches throughout the system and doing a great job. Now, Ron Barrett II, Ron, he's over here with the table with Sophie there. Ron, if you'd stand up. He's also a Virginia Tech graduate, got a farm background. He was in the farm supply business management up in Northern Virginia. Now he's at Virginia Tech and doing their excess inventories at Virginia Tech. Raleigh Hyder, you're going to hear from here in a few minutes. He's also a Virginia Tech graduate. Looks like I'm repeating that name a lot. He's, of course, farm raised like the rest of us, and he was with Farm Credit for a while like his dad, and now he's the chief credit officer here at the bank, and we'll talk about him a little bit more, but he's doing a great job looking after all of our loans. Dave Leonard II, where are you? Hey, right out here in the front, got on the dark suit there, and I think he's the father of the youngest stockholder here, and Dave, of course, also has an ag background. And he started his career as a teller at First Bank and Trust. He's now in property management, and he trades a lot in the stock market, which I know nothing about, and I'm glad he knows that. But anyway, got to be smart to do it. Trent Yates. Trent, where are you? Hey, over here in the lines up there he is. He did what? Oh, that's right. He'd been across the pond. I'm glad you got back, Trent. He's a UT graduate, if you can imagine a thing like that, and he had farm background also. He most recently has been a division manager for Old Dominion Freight Company and retired from that. And then me, I'm a Virginia Tech graduate also, kind of a cattleman developer, and been on the First Bank board since '87, and that's a long story how I got there, but I appreciate being here just the same. So happy Tax Day, everybody. Welcome to the 45th Annual Stockholders Meeting of the First Bank and Trust Company. And I represent, standing here tonight, proud to do that, 452 of the best bankers, not just in Virginia, but in the United States. And I believe in God. I believe in family. I believe in the United States of America. And I believe in the First Bank and Trust Company. And kind of in that order. You, of course, are privileged as stockholders to be here and be stockholders in this bank. You're a part of the top-ranked bank in Virginia. You held on to your stock. Yeah. Why did you do that? Well, maybe you're stubborn. Maybe you're lucky. Maybe you're just smart and loyal. And, of course, it's hard to buy this First Bank stock, so you're proud to have it, and it'd be hard to try to get it bought now. But also, the big thing is, I think, that you have been rewarded through the growth and through the dividends also. As you know, and we'll talk about a little later, you have been through 7 splits, 2-for-1 splits since 1945. 10 years ago, there were 120 or more banks in Virginia, 120 banks, if you can imagine. And today, there are 62 banks left in Virginia. And other states, like Virginia, are similar in their buyouts and mergers about the same as we are. Why are there less banks in Virginia? They've been sold, they've been merged. The boards and the stockholders of many of these banks have lost faith in the continuity and the leadership of management in those banks. And because of that, they've sold them or merged with another bank. We've been trying to guard against that as best we can. First Bank and Trust has a succession plan at all levels. And when we have somebody trained in a different position, they have a mentor there so that they can learn what's going on in that position. We have 32 young bankers, young people that have been hired out of different colleges or have a lot of faith that we have faith in them, and they're trainees, and they train, like we say, with mentors and work their way up. Now, one of our philosophies is hire to retire. We'd like to hire the kind of people to come to First Bank that want to make a career out of it and make their business here, because you can develop your own business at First Bank and Trust Company because people like to deal with people. So customer continuity, that's what we're after. And we think if you come with us, you've got a great future. Now, we're also in training of tellers and CSR, and we were over at the training center the other day, and by the way, just across from the executive offices there in the old Rite Aid building, we've got the teller center over there, the training center, and the operations center all there, and it's such more efficient than what we had before, and what we had before was nice, but this is so much more efficient, and the people over there really like it. Now, we talk about specialists in different departments. We talk about Mark and Eric, and they have their great guys, and they really know what's going on in their department. And I guess you couldn't find a better CEO or CFO hardly if you hired. But they're not perfect. Let me tell you, I was over at the Operations Center the other day, and I've been having trouble with my phone for 2 days with my accounts and looking everything up. Mark and Eric tried on that for 2 days, didn't get anything done. I was over at the Operations Center, and a couple of those girls got a hold of that phone. In about 2 minutes, they had it all worked out. So we've got a specialist in every department, and the CEO doesn't especially know it all, but he knows a lot. There you go. Our First Bank board, we meet twice a month. Most bank boards meet once a month. I'll have to say that in talking to other bank board members throughout the state or other states that we go to, we're the best informed. The executive staff does a good job of keeping us informed of what's going on. And then we do some visits in North Carolina and Tennessee or Northern Virginia or whatever. And I'll have to say that I've visited with several of these loan officers, but one of the most interesting, I guess, Nelson Powell, he's down there in Carolina, spent 3 days with him, and it's amazing when they go to visit his customers how they really have a lot of faith in a loan officer and they're good friends as well as business associates. I heard on TV the other day, they were interviewing the world's oldest man, and they asked him, said, how did you live so long? He said, well, I always do the best I can do every day, contributed to longevity. Well, I'll tell you, our people here at First Bank and Trust are going to live a long time because they do the best they can do every day. And the other thing is, you know, we all make a mistake now and then, and I'll have to tell you about one I made. Hate to admit this, but sometimes you do it. My wife asked me the other day for chapstick. I handed her a glue stick. She didn't speak for 3 days. I'll just say if you're awake. Throughout the banking industry, you've had a chance to study it, and the thing that we've seen, throughout the banking industry, there's a thirst for personal contact and service in the people that they work with. And all you senior executives and people that work these things every day, you know that. There's a thirst out there. We were opening down in Livingston, North Carolina a year or so ago, and 2 executives from Smithfield Foods, and it's a big outfit. They killed 32,000 hogs a day, And two of these executives traveled 2.5 hours each way to meet with Mark and me. Do you know the thing they wanted to know most? They'd been with a lot of banks, and a lot of banks had been sold and merged out from under them, and they had to change banks. They wanted to be assured that we were going to stay independent. They've had too many changes. Now, we have gotten some of our best people from these mergers too, because these loan officers, and some of you guys here tonight know that you've been through the merger and you didn't want to do it through it again, so you came to First Bank and Trust Company. I'll tell you another thing too, talking about personal service. The bank owns 54 vehicles to visit the farms and businesses and be out there among the people. And Eric can tell you, I think he put $500,000 aside for keeping these vehicles up and trading. So there are 54 of them that the bank owns. And these loan officers go out there and they meet with people and they put all the information together and they scribble it down and they bring it back to the loan analyst inside the bank. You talking about unsung heroes as the loan analyst and the tellers and the CSR. But when they bring that back, then the loan analyst gets a hold of it and they put that down so that it can be understood and it's a value to the customer too. They get a lot of ideas from that they didn't know about their own business. We have a growth philosophy at First Bank and Trust Company. We like to find areas that are well established in agriculture, that they have future growth potential in commercial and residential. And then we like to find in that area a well-established, well-connected, outstanding banker. So we get with that banker, get him hired. We open up a loan production office. When he gets up maybe 50, 60 million or so, we analyze that again. Is this an area we really want to be in? Is it looking good for us? If that's the case, we find a prime location and we build a First Bank and Trust. Now, there's a long story of how this has worked. In Southwest Virginia, of course, Bill got hired by John Meade and Smiley Rattle up there in 1979, and Bill took to new levels what we're doing here. Then he talked John Meade into going down to Johnson City, and John was good at establishing a new area and did a great job there, and that worked good, really good. Then Shenandoah Valley, John had gone to another bank or two, and it wasn't like First Bank, so he decided he'd come back. We met with him up at Ingleside and established there at Stanton in the Shenandoah Valley. And John, you're up there now and doing a great job. Then we did about the same thing in the New River Valley. Found Jim McAllister, and Jim retired this past summer. Did a great job for us. He opened up a loan production office there in a shopping center. He took that loan production office to $50 million, and Bill and I were up there and looked around at several places we wanted to build a bank. And Bill, we got turned down on several of them, but we ended up in the best place with a 4-story building up there, and it's been great. About the same thing in North Carolina. Everett Johnson went down there like 20 years ago, established some agricultural loans in North Carolina. And then for 17 years, we have sponsored the North Carolina Cattlemen's Dairymen's Meeting at Hickory, North Carolina, and established a lot of good efforts down there. Then after that, this Robo-Bank, which is a Dutch bank, they do agricultural loans all over the United States, but they don't do deposits. So 3 or 4 of those fellows with the Robo-Bank weren't exactly satisfied, and Mark got talking to them. We've hired 3, maybe 4 of them down there in North Carolina. We've established a great beachhead in North Carolina. Mark will tell you in a minute, but we've already got $200 million in loans down there. Then we're doing about the same thing in Georgia. We got one of those robo guys hired in Georgia, and he's already bringing loans. And the thing about these guys is that they're country boys, and they're good bankers, and they've got our philosophy, and we need to keep that. Now, you say you build the banks like that. Well, we think it's a lot better than doing a merger and bringing other banks in and issuing stock. If we do that, we water down the stock, and your stock is not as valuable, and you don't have as much control. Another bank I was with one time, after it got merged and sold out, we didn't have enough control there. And one of the guys said, if you don't own it, you can't control it. So now with the employees and you and and the board and all, we can keep a control on that. And Bill established those guidelines a few years ago so that we can do that and we can keep the First Bank philosophy. It doesn't water down the stock. We're dedicated to staying independent. We think it's great for the stockholders, you. We think it's great for the employees because they don't have to go through those mergers and different things. It's great for them. And for the customers, all the feedback we get from everywhere we go in the different states and different areas, the customers, they don't want mergers either. They want us to stay independent. So I'd say from my analysis anyway, and I think from anybody that works in the bank, you'd get the same thing. The future is bright. We're established. We're well positioned. We've got momentum going, and we've got the best people in the banking business. But then if you look around, and sometimes we fly to the different areas and you look over, you know, we haven't scratched the surface to what can be done. We're at $3.4 billion now, and that's a long way from the $1 million we started with 45 years ago. But if we stay in our lane, keep doing what we do well, hire to retire, and don't get complacent, we can continue to grow, and your stock will still have value. We've been hearing a lot about EVs, electric vehicles. They've gotten so popular. They're so popular that 96% of them are still on the road, and 4% of them got home. I figured you'd catch that. Well, we're going to get to what you came here to hear in a minute, and the senior VPs have got great reports. As Eric said, maybe a monkey could do this report, and I said, no, Eric, you couldn't. I know you've got great numbers to work with, but you guys do a great job with what you're doing. So then we need to get on with our annual meeting, so we'll call that to order. And now we're ready to call for a chairman to conduct the meeting. We have a second to that? Have a motion and a second, or further nominations? If not, all in favor? Well, I got a few votes, thank you. No votes yet. Now we need a secretary to conduct the meeting and do our business for tonight. We have a second to that? Thank you for the second. All right, no further nominations. All in favor of Sophie being the secretary of the meeting, say aye. If you're opposed, say no. Sophie, you didn't get any negative votes, so I guess you're in. So, Sophie, if you would come up and give us a notice of the meeting, which is it's the legal way we do that.
Good evening, everyone. To the shareholders of the First Bancorp, Inc., notice of the 2024 annual meeting dated March 13th, 2024. Notice is hereby given that the 2024 annual meeting of the shareholders of First Bancorp, Inc. will be held at the Southwest Virginia Higher Education Center located at 1 Partnership Circle, Abingdon, Virginia, 24210, and via live stream at 6 p.m. on Monday, April 15th, 2024. Please visit firstbank.com to view the live stream. The purpose of the meeting is to consider and act upon the proposals to, 1, to elect 3 Class A directors to serve until the annual meeting of the shareholders in 2027, and 2, to transact such business as may properly come before the meeting. Only those shareholders of record as of the close of business on March 13th, 2024 shall be entitled to vote on matters presented at the meeting or in adjournments thereafter. To assure that your shares are represented at the annual meeting, even if you plan to attend, please complete, sign, and date the enclosed proxy and return it promptly in an enclosed self-addressed envelope. Your proxy is revocable at any time prior to this exercise. The annual report to shareholders will be available online April 1st, 2024 at firstbank.com by order of the Board of Directors. W. Mark Nelson, President and CEO.
Do I have a motion to approve the notice of meeting? Have a second? Second. All in favor? Now, Sophie, don't sit down too quick. If you'd come back, please, and read to us or present to us the minutes of the last year's meeting.
The annual stockholders meeting of First Bancorp, Inc., held on April 13th, 2023. The annual meeting of the shareholders of First Bancorp, Inc. was held at the Southwest Virginia Higher Education Center in Abingdon, Virginia at 6 p.m. on Monday, April 17th, 2023. This annual meeting was called and conducted in accordance by the bylaws of First Bancorp, Inc. of Lebanon, Virginia. David A. Leonard welcomed the shareholders that were in attendance, including those shareholders viewing the live stream meeting, and provide his opening remarks to the shareholders. He then proceeded to call for nominations for the election of a chairperson for the meeting. A motion was made by Mark Nelson and seconded by Raleigh Hyder that David Leonard be elected as chairman for the meeting. Mr. Leonard was duly elected chairman of the meeting by acclamation. The chairman then called for nominations for secretary. A motion was made by Trent Yates that Sophie Chafin Vance serve as secretary for the meeting. The motion was seconded by Ronald Barrett, and there were no further nominations. Ms. Chafin Vance was duly elected secretary of the meeting by acclamation. The chairman then requested that the secretary present proof of the official notice of the meeting, whereupon Secretary Chafin Vance responded by reading the notice sent to all the shareholders. A motion was then made by David Leonard II that the shareholders approve the notice complying with First Bancorp, Inc.'s bylaws. The motion was duly seconded by Ronald Barrett II and unanimously carried by all present. The chairman then requested that the secretary read the minutes of last year's stockholder meeting. Secretary Chafin Vance responded by reading the minutes, whereupon a motion was made by William Hyder, seconded by Ronald Barrett, that the minutes be approved as read. The motion was unanimously carried. The chairman then requested that a canvassing committee composed of Eric Moore, Monica Anderson, and Elizabeth Dean be established to determine the number of shares represented at the meeting by proxy or in person. The chairman provided his comments to the shareholders and then called on SVP and Chief Credit Officer Raleigh Hyder to provide an update of the overall company credits and his goals for 2023. At the conclusion of the credit report, Raleigh Hyder called upon Chief Financial Officer A. Eric Moore to provide the prior year financial update, whereupon a full and complete financial statement was presented and detailed comparison was made of the bank's performance for the years 2018 through 2022. Following Mr. Moore's comments, President and Chief Executive Officer W. Mark Nelson presented to its shareholders an overview of the company's activities for the previous year and his vision for the future. The chairman then requested that the canvassing committee report its numbers to determine if a quorum was present, whereupon the shares were tallied, with Mr. Moore reporting that there were 6,366,268 shares represented at the meeting out of 8,298,700 total shares outstanding. Of those, 3,886,274 shares were represented by proxy mail, and 2,479,994 shares were represented in person, giving a total representation of 76.71% shares outstanding. Chairman Leonard then declared that a quorum was present and the meeting duly in session. Chairman Leonard then explained that in accordance to the Title IV of the Articles of Incorporation, stockholders shall vote to elect directors for a 3-year staggered term. Directors are designated as Class A, B, or C director. It was noted that 3 Class C director terms had expired in 2023 and therefore requested the nominations to fill the vacancies were sought, whereupon a motion was made by Mark Nelson that Class C directors Sophie Chafin Vance, Ronald Barrett II, and Raleigh Hyder be reelected to serve additional 3-year term until 2026. The motion was duly seconded by Ronald Barrett and Sophie Chafin Vance. Ronald Barrett II and Raleigh Hyder were duly reelected to the First Bancorp, Inc. Board of Directors. Chairman Leonard called for a motion to fix the number of directors to serve for First Bancorp, Inc. Upon motion by William Hyder and seconded by David Leonard II and duly carried, the number of directors was fixed to 9. Chairman Leonard then asked if there were any additional business to be brought before the meeting. Trent Yates responded by making a motion that the active directors and officers be approved for the past year. The motion was duly seconded by Ronald Barrett II and unanimously carried. Chairman Leonard then made his closing remarks and then asked all directors elected to meet immediately following the adjournment of the meeting for the reorganizational meeting. There being no further business to be brought before the meeting, a motion was made by Mark Nelson, seconded by Sophie Chafin Vance, and duly carried to adjourn the meeting. Thank you.
Thank you, Sophie. Do I have a motion to approve the minutes of last year's meeting? Have a second? Second. All those in favor of approving the minutes from last year's meeting, say aye. Opposed? I'm going to appoint a canvassing committee now, if you would, please. Eric Moore, Monica Anderson, and Samantha Mitchell, if you all would go out and canvass to make sure that we have a quorum present to do business for the bank. Meantime, we're going to call on our executive staff to give the reports, and I think you're going to enjoy this. You may have read those reports on computer, but it's much better to hear it in person. And Raleigh Hyder, of course, is our Chief Financial Officer and done a wonderful job. We have a lot of great loans coming in every week. I have friends of mine in Northern Virginia say, well, how do you all do that? How do you get loans and all? I say to them, well, it's kind of simple, Joe. Our people work, and they do. They're out there getting these loans every day, and Raleigh's going to show you how many loans and how well it's doing. And he has low past dues and low write-offs, so we commend him for that. Raleigh?
Thank you, Dave. Thanks. Let's give Dave a round of applause, please. And thank you, Mr. Chairman, and good evening to our fellow shareholders and employees. For those who do not know me, my name is Raleigh Hyder, and I'm the Chief Credit Officer for First Bank and Trust Company. And it's my pleasure to begin our presentations tonight in regards to the status of your investment in First Bank Corp. Incorporated. Following my comments, you will hear from Eric Moore, our Chief Financial Officer, and Mark Nelson, our President and CEO. The topics I want to briefly discuss, however, have to do with the performance of our loan portfolio. At the heart of our lending results are the people that make it happen. From all of our staff, our customers, and our shareholders, their culmination leads to our bank's performance. This performance is born from strong shareholder support that fuels our ability to recruit and retain the best bankers who morally and fundamentally represent First Bank and Trust Company's core values. Doing business according to our core values of honesty and integrity continue to spur interest in other bankers who carry similar values. These bankers in turn become entrenched in our culture and invite their clients, friends, and family to bank at their new bank that can offer them the service expected from a community bank, but the resources to tackle their largest and most complicated needs. And while our lending success is measured in terms of loan growth, the true catalyst comes from your banker's ability to generate organic loan growth through well-tended customer relationships. In 2023, our outstanding loans increased to almost $2.9 billion, from $2.4 billion at the end of 2022, an 18% increase. Since the end of 2019, we have grown loans by over $1.3 billion, amongst challenging conditions spurred from COVID, rampant inflation, and record increases in interest rates. Your bank continues to show its resilience by reaching the best markets with the best bankers. While $1.3 billion in growth over a 4-year period might seem like a lot and fast, we can confidently say our principles in lending have not changed. As I mentioned, we ended the year with almost $2.9 billion in outstanding loans by growing net loans $435.7 million. This far exceeded our goal and our expectations set out in the previous year's strategic planning session of $272 million in growth. Our growth was predicated on a number of factors, including sharing First Bank and Trust Company's customer service in new markets such as North Carolina, having the capital to take advantage of situations where other banks did not have the funding capacity to adequately service their existing customers, and our lenders' ability to be a trusted advisor and confidant for new and exciting ventures. You will note that our growth did not come from one area in particular, but from all core lending segments at our bank in 2023. A fully diversified portfolio is a significant hedge against market corrections. History has told us, for example, if commodity prices suffer, the commercial segment tends to do well, and vice versa. This should not only create stability in our loan portfolio, but confidence in our shareholders and our employees. While diversification is important, the velocity at which your bank is able to close loans plays a key role in stability. In 2023, we closed 5,223 loans for over $1 billion, comprising over $600 million in the commercial segment, $230 million in agricultural loans, and $180 million in residential mortgages. The influx of new loans allows us to be nimble, to adjust our loan pricing to adequately compensate for our cost of funds, especially in a changing rate environment. You will note that the prime rate of interest increased from 3.25% in 2021 to 8.5% at the end of 2023, an increase of over 160%. Yet our margin was able to stay relatively consistent. Net interest margin will continue to be a challenge in 2024, and as community bankers, we need to be focused not only on originating sound new loans, but remaining focused on building sound new core deposits. Core deposits has and will continue to be our driving source of funding, as it offers us the best net yield and continues to boost our bank's long-term shareholder value. With being just as important as margin, the quality of our credit portfolio remains of the utmost importance, especially as we enter uncertain times in the economy. We remain committed to achieving above-peer credit metrics in all aspects. Our non-performing loan balances at the end of the year were $14.2 million, which resulted in an increase to our non-performing to capital ratio to 3.83%. This is still well below the national average of 6.12%. In addition, our past due percentage at the end of the year was still in the very acceptable range of under 1%, and this remained the case through the first quarter of 2024. In addition to your traditional credit metrics, we continue to closely monitor exposures in commercial real estate to evaluate potential risk among a certain sector. An area that is increasingly in the news is leased office space. We have very little exposure in this area. In fact, it only represents 2.5% of our total loan portfolio. Commercial real estate will continue to be monitored so that lending opportunities are in and around cities and towns that have shown steady and stable growth. Next, I want to update you on our loan loss reserve. This reserve is in place to account for the possibility of future credit losses. We began the year with $36.7 million in reserve and ended the year with $40.3 million. We contributed almost $5 million to the reserve in 2023 to account for strong loan growth and to remain conservative on the balances we set aside. We ended the year with 1.4% of reserve to total loans, which continues to be above peer comparisons. This is not due to an increased level of perceived risk, but rather prudent banking decision to control what we can control and offset the variability in market conditions. In terms of accomplishments, we certainly have achieved a lot together in 2023. We were able to exceed our loan growth expectations through a challenging interest rate environment, while at the same time staying true to our underwriting principles. These principles have stood the test of time and will help the bank withstand whatever external conditions are thrown our way. We have identified lending segments that deserve caution, such as developments in construction lending, and set underwriting expectations for our lenders and clients. We have stress tested our entire loan portfolio, including our largest commercial real estate transactions on an individual loan basis, to ensure we are taking the appropriate steps to mitigate market risk. Lastly, we have continued to take steps to improve the customer lending experience, from accessing funds quickly and easily to reducing the amount of paper used in a loan closing. So as we look into 2024, we will continue to be growth focused. We will not, however, grow by losing sight of what brought us here, which is our fundamentals. These fundamentals are predicated on our core values, our ability to underwrite to the highest level, and by not participating in a pricing competition. Our growth will be built on customer service. We plan to grow loans by $275 million in 2024, and we are well on our way given our first quarter's performance. We plan to take every step we can to account for a changing rate environment, and not just assuming rates will eventually fall. We have an obligation to our shareholders and our employees to swiftly identify risk, mitigate the risk, and find a solution while understanding to the fullest degree the impact on our customer. I want to conclude by reiterating to you that growth and service will be our focus. While expense cutting may improve bottom line performance in the short term, it leads to a lesser customer and employee experience. This is not a solution to long-term value. Others focus on reduction. We focus on principles of building long-term relationships with our customers. Relationships will allow us to grow as times change. relationships built on trust. Now, at this time, please join me in welcoming Eric Moore, our CFO, and he'll provide you with a financial overview of our company. Thank you.
Good evening. My name is Eric Moore, and I'm the Chief Financial Officer for the First Bank and Trust Company. It's my pleasure to be here this evening to report to you, our shareholders, the 2023 financial results of First Bancorp Incorporated, the parent holding company of the First Bank and Trust Company. Total assets increased by $181 million in 2023, ending the year at $3,142 million. This represents annual growth of about 5.8%. If you look at the last 5 years, the bank has grown $1.5 billion, almost 84%. With this growth, First Bank and Trust Company now stands as the 9th largest bank in the state of Virginia, among the 62 other banks headquartered here at the end of the year. During 2023, the bank grew deposits by $160 million from $2.77 billion at the end of 22 to $2.93 billion as of December 31st, 2023. And during the first part of April this year, total deposits exceeded $3 billion for the first time in the bank's history. The 5-year deposit growth is over $1.4 billion, rising 93.3% over that period. And our loan-to-deposit ratio was 97.9% as of December 31st, 2023, which means that almost 98 cents of every dollar of our deposits are loaned out and invested in communities we serve. The amount of equity capital increased over $33 million in 2023 to $318.1 million. And this after paying out dividends of $18.1 million to our shareholders. In the past 5 years, the company's capital has grown by $119.9 million, or 60.5%. Net income for the year ended December 31st, 2023 was $50.1 million, an increase of 4.58% over the $47.9 million the bank earned in 2022. Nationally, net income for community banks as a whole decreased in 2023, as reported by the FDIC. This was primarily due to the rapid increase of interest rates by the Federal Reserve in the second half of 2022 and the first part of 2023, along with increased deposit competition faced by most community banks. Interest income totaled $177,906,000 for 2023, an increase of over $52 million from 2022. While a portion of this increase in interest income can be attributed to the rising interest rate environment, the bank also substantially benefited from the $435.8 million in loan growth detailed by Raleigh in his presentation. Interest expense for the year was $64,857,000, a significant increase over the previous year's $18,077,000. With 7 Fed funds increases in the latter part of 2022, followed by 4 additional increases in 2023, interest expense was dramatically higher for the year. It's even more striking if you look back and compare it to 2021, when total interest expense for the whole year was only $8,927,000. While we do expect higher interest expense in 2024, it shouldn't grow as fast as it did in 2023, as the Fed has held rates stable since last July. Regardless of what rates do in 2024, we will continue to effectively manage our net interest margin as we've always done. I'll make sure I'm on the right slide here. I wanted to go back to the slide. Sorry, I wasn't done with that. We added $5.2 million to the provision for loan losses during the year, and the reserve stood at $40.4 million at the end of 2023. We had other income of $19,441,000, and other expense increased $4.9 million in 2023, a 7.9% increase, as inflationary pressures continue to have an impact on operating costs. It should be noted that of the $4.9 million in increased other expense, $3.4 million, or approximately 70% of the increase, was in salaries and benefits for our employees, investing in our existing staff, as well as hiring new production employees. Despite the increase in other expense, the bank still maintained an above-peer efficiency ratio. And after paying income taxes of $11,185,000, our net income totaled $50,118,000, an increase of $2.2 million over the prior year. Net income per share for 2023 was $6.04, an increase of 26 cents per share over the $5.78 earned in 2022. Cash dividends paid to shareholders increased 9% in 2023 to $2.18 per share, an increase of 18 cents per share. In the last 5 years, the company has paid dividends to shareholders of $73.8 million, with the dividend growing 74.4% over that same time span. Our book value per share at the end of 2023 was $38.95, increasing $4.03 over 2022. As I mentioned earlier, the bank maintains an above-peer efficiency ratio, which is a measure of expenses to income. So the smaller the number, the better it is. With most banks having efficiency ratios in the 60 percentile range or higher, we were pleased that our efficiency ratio remained stable in 2023 at 49.79%. Return on average assets was 1.58%, a very good result, but down slightly from the 1.62% achieved in 2021 and 2022 when the bank benefited from PPP income. The return on average equity was 16.64%, and dividends declared as a percentage of net income was 36.05%. Capital to assets increased 51 basis points during the year to 9.57%, up from 9.06% in 2022, an intentional strategy to strengthen the company's capital base. Tier 1 capital to risk-weighted assets totaled 12.63% for the year, far above the regulatory threshold of 8% to be considered well capitalized. And total capital to total risk-weighted assets was 13.89% at the end of 2023, also considerably exceeding the well-capitalized standard of 10%. Earlier, I talked about the management of our net interest margin and how we must continue to manage that to achieve our desired results. The blue line, representing the Fed funds interest rates over the last 5 years, clearly shows the volatility and rapid increases in 2022 and 2023. However, the red line, our net interest margin, has remained remarkably consistent over time, with the only deviation being a bit of a spike in 2021 and 2022 due to PPP income. If anybody tells you they know what interest rates are going to do in 2024, I'm pretty sure they're lying to you. But if we continue to manage our net interest margin like we have in the past, we'll be successful no matter where interest rates ultimately decide to go. My previous slide takes me right into our top priority for 2024, to effectively manage our funding costs and our loan yields to achieve our net interest margin targets, regardless of the interest rate environment. We must continue to grow our deposit base to ensure sufficient liquidity and to fund our anticipated loan growth of $275 million. The current environment is very competitive for deposits, from banks to credit unions to fintechs. This is one area where you, our shareholders, can directly have an impact on the company. By choosing First Bank and Trust Company for your deposit and banking needs, and by advocating to your family, friends, and neighbors to do business with the bank. As competition and pricing for deposits becomes more intense, it's more important than ever that we grow our non-interest-bearing deposits, which will help defray our overall deposit costs and help us to hit our net interest margin targets. And lastly, we will continue to effectively manage our non-interest expense, maintaining an above-peer efficiency ratio. So I'd like to thank you for your time and your attention tonight. At this point, it's my pleasure to introduce our President and CEO, Mark Nelson.
My Lord, it's hard to follow people that are a lot better than you are, but you know, when you're 62 years old, you're probably going to do that a few times. Hey, what a great job that Dave, Raleigh, and Eric did. I mean, the numbers are just astounding to see what this bank has been able to do over the last 5 years, over the last 45 years, and really to look at what's just the start of what the future is for this company. I mean, it's just the next generation will take this bank to places that I can't even imagine. I know in 2019, I woke up in the middle of the night dreaming to see these numbers. And it, you know, to be able to be a part of that has been tremendous for me. But Raleigh and Dave and Eric, you all the information. I hope all the shareholders can see the value in what is accomplished by all of our 452 employees. But really, this company has never been about one person. It's always been about the group. It's always been a we company. It's not ever been a me company. And that's remarkable in today's environment. So I'm really appreciative of that. But I really would like to recognize and thank each of the shareholders that were highlighted in our annual report. I mean, this year, our annual report, in my opinion, and I say it every year, Eric and Caitlin and Brianne and everybody that worked on the annual report, there are a lot of hours go into it. But to go out and highlight some of our shareholders was just a tremendous job by them. Ron and Ronnie Barrett, Billy and Patty Salyer, Don and Jean Linkus, who I believe has been to about every shareholder meeting we've had, Tom, Liz, James, Hillary, and Annie. What a great story, you know, legacy. Sharon Scott, John Tuttle, Megan Smith. Each of our company's shareholders have a story, and to include every story is just almost impossible. But all the stories there and all the history that we've talked about, and I know Dave did a great job going back in time. It's so good to listen to that. But all of the stories for everybody, they're all important to us. It's not just the stories we put in the annual report, but it's all of the stories that have been out there. I'd like to say thank you to each of you for being here tonight, present, in person, or watching online. I also want to say thank you to each of you for your continued investment in our company and support of our mission to provide efficient financial services. The investment you made to purchase stock or retain stock in our company is one step in partnering with us to meet the financial needs in our communities. The next step is really for us to earn more of your financial wallet by offering you and all of our clients the service expected by providing quality customer service and efficient financial services. And I think we do a great job of that. We want to be the bank of choice for all of your financial needs. As you expand your financial wallet, as the next generation comes along, we also want to earn your personal financial management, trust, brokerage, and investment business. And I thank each and every one of you that do business with us today. And a lot of people don't want to hear this out of me because we spend a lot of money on marketing. But I'll tell you, the greatest marketing that this company gets is when one of our customers talks to someone else and tells about their experience. It's remarkable how many times, and I've been fortunate to be around here for way too long probably, but to go out and listen to the people talk to each other about their experiences with our employees. It's remarkable what our employees do. But as we continue to build our overall branch and digital footprint in 2023, we were provided an opportunity for a refresh of our website. And we continued building out our digital presence. We've already seen positive results from this build out. And we encourage you to utilize the features to learn more about our company. There's a tremendous amount of information out there that you can learn about our company, and anything that you really want, they put into our website, and it was a great job done by Caitlin and her group. But overall, we've just scratched the surface. Raleigh talked about it, Eric talked about it, but the future is so bright with all the investment that's been made. And Raleigh is right. You can't save your way to prosperity, but you can utilize the funds you have to have a good return over time. And I think that's what our bank has really tried hard to do. But the 2023 financial achievements were numerous. Raleigh talked about them, Eric talked about them, Dave talked about it, and some. But if you're looking back, you're not going forward. And we really do want to focus on 2024 and beyond. We're going to continue to grow our bank. We're going to do it, as Raleigh talked about, through quality customer service, utilizing our overall foundation that's been built over 45 years. This thing just didn't happen. It was a lot of hard work, late nights, crying probably. I do a lot of crying, but crying a little bit and just trying to get better. And that's what we've done. So I'm so proud of that piece of it. But we're going to stay focused, and Raleigh's right. We're going to stay focused on our big objective. And there's nothing better than customer service. We're never going to be, I don't think, now Bill thought we would be J.P. Morgan one day, and he probably will be right and I'll be wrong. But I figured we're not Wells Fargo today, but I can tell you our service is world class, in my opinion. I mean, if you talk to people, they'll tell you that, and we are the bank that puts you first. And it doesn't matter if you're talking to our employees through chat, if you're talking to them through text, if you're talking to them through ways that I don't even know, or if you're in our branches. I do believe our associates are world class. We're going to continue, as Raleigh talked about, we're going to ensure that our associates that we hire have the experience to go out and talk about what they're trying to loan money on. You know, our agriculture division is a great example. There isn't one of those individuals that work in our ag division that doesn't know agriculture. You know, I'm not an agriculture guy, but I've learned a lot from them. And they know how to go out and talk to their clients. And that's something that larger banks can't take away from us, that personal service. We're going to keep doing the technology. I mean, change is going to happen. We may not like it. We may want the paper. We may want other things. But change is going to happen, and technology is going to be a part of our future, and we just have to keep finding ways to keep it safe, secure, and be on the edge, but not cut ourselves with the technology. And Dave talked about it. Being privately held, there's no doubt about it. It gives you the freedom to innovate. It gives you the freedom to serve your clients in a way that you might not be able to. And it really, for me, I watched Bill do it for many years, is focus on the future. Don't always look at where you are today, but look at where you're going. But I can tell you this slide has meant a lot to me over the years. And it's all 452 of our employees. And every one of them deserve a big hand. And I want to ask you to give them a big hand, because they work daily to ensure that our company serves our clients in a big way. Next group, you know, I'm the dumbest kid on this. I mean, I'm not even up on this slide. And I say kid, but I'm a little bit old for that. But I can tell you that these are the smartest individuals that could have ever been handpicked to run this company. And I am so proud of what they're going to do as they continue to manage it for the next generation and keep growing our company over time. But I can tell you, when you look up there and you look at the years of service and you think, this is just the years of service with us. Many of them have service with others, but it really is impressive to look at some of the individuals like Kelly Kendrick that I'm going to talk about in a few minutes that came up through our management trainee program all the way to run one of our largest regions. You look at Bradley Webb, who's now going to take over our agriculture division, came up through our management associate program that Bill put in place to be able to lead our company into the future. But I can tell you, they're bright. They're a whole lot smarter than this old dumb country boy. But this is a quote that I like. It's the talented and experienced workforce at First Bank and Trust Company will continue to be dedicated and committed to maintaining a nationally recognized and community-focused institution that embraces change. I think we do have to do that. That benefits clients and communities and builds shareholder value. We need you, our shareholders, to continue to bank with us, to continue to hold us accountable, and we are asking for your continued business. And I always add something in there. Together, we can continue to ensure our bank exceeds expectations. Next slide. I'm just a small part of the things that we've been able to do to add to our company, but I'm so proud of what we've been able to do going into North Carolina, to expand up in the valley, to expand in Tennessee, and some of the things that we've been able to accomplish in the last 5 years. But we're not finished yet. We've got a young man here with us tonight that's out of northern Georgia. We've took that leap down there. We're going to see how good we are in the agriculture sector in northern Georgia. It's going to be part of our East Tennessee region, and I'm looking forward to all that Jason will do in the future, as well as another area that we're looking at pretty strongly is Tappahannock, to be able to take our agriculture. We'll have a lot of loans in that area, and to go there and to pick up some of the funding to continue to grow our company. Not to leave anybody out, but I'm going to talk a little bit about the regions, and then I'm going to talk a little bit about some of the divisions, but I don't have a slide for the group that I'm going to talk about next, which is all of the operational individuals. Having come up in the bank through the operational side, there are many times that they get all the blame and none of the credit. But every single person that works for us on the backside of this company deserves all the accolades you could give them, because they're the ones that have the customers that they have to calm down, that they have to work with, and they get very little praise or credit. So I want to make sure I speak about them. And then I want to talk a little bit about Southwest Virginia. It's where it all started. Dave talked about it. And we are blessed to have a young man who is, in my opinion, a true banker in all aspects, and that's Brent Dyson, to run our region here. And he has continued to build. He's continued to build our deposit base. He's continued to find ways to do loans for other areas, and he has done a remarkable job managing our Southwest Virginia region. And he took a chance on us. He would have probably been the president of another bank, but he took a chance on us, came to First Bank and Trust, and done an excellent job. And through him and his staff, they've been able to lead Southwest Virginia to be our number one deposit base with over $1 billion in deposits, growing it by about 50.5 million last year. And loan growth, not to discourage the loan growth has been great in Southwest Virginia. And Brent has found new ways to be able to continue to grow that region. And for that, we're all appreciated. We certainly appreciate Brent and his staff. One of my other good friends, Mr. Hugh Ferguson, who's took more chances on me than anything. He's rode with me. He's probably been worried to death I was going to run off the road, but Hugh has stuck with me, and I've always really appreciated Hugh. He runs our Tri-Cities region and does a great job there too. And he wants to continue to grow it, and he certainly has. But we had a little decrease in deposits in the Tennessee region, but I'm glad to tell you that as of today, those deposits are back up to about $569 million. And you know, Hugh has a region that all of our regions have fierce competition. But I'm telling you, down in Johnson City and Morristown and down in Kingsport and Gray and Bristol, there's a lot of competition. And Hugh has done a tremendous job to not only maintain, but to grow the region. And we were blessed to have him come. Bill hired him to come to our company and to do some energy lending. And lo and behold, he became a regional manager and has done a great job for our company. Shenandoah Valley, what can I say? John Bowers is a lifetime banker too. He's just like Brent, both of them, and Hugh. They live and breathe it. They're true bankers, not just lenders. The Shenandoah Valley has our largest loan footprint with $927 million in loans. What a job they have done since going up there in 2001, as Dave talked about. But more remarkable is the work that John has done to challenge his employees to not only grow the loan base, but to grow the funding base. And it really has worked. His goal is to be self-funded, to grow to $927 million in deposits, so that, in his words, Eric's not charging him so much for the money. But he's done a great job, and he's been a real friend to me. The Blue Ridge region, it's really it's a brand new region for Kelly Kendrick. She came up through our management trainee program, and Kelly has done a remarkable job following a legacy. Jim McAllister was a banker that woke up at 3 in the morning, started working, and didn't quit till late at night. Kelly has come right behind him. She's building her staff, and Jim worked with her for quite some time, and I think the future is just so bright for her and all of the things that region will continue to do and the challenges that she will face. But I know that she's up to those challenges, and I look forward to seeing all that she will accomplish. But it is a great region, and Jim left a great legacy there. And he couldn't be with us tonight, but him and Sue would have loved to have been here, but they had another commitment, and I think he's enjoying retirement. North Carolina, what can I say? From a theory and a thought with what happened, and we went over to Mount Airy. Mount Airy side of it, we were very good with Everett Johnson and doing the agriculture, and then with Bradley and Keith and all the work that they've done to go out and find new individuals to come and work for us. Trevor Smith came along, and it was probably one of the best hires I've ever made, and he was a one-man show down in Lillington, North Carolina for a little while, but he did a great job of starting the team. And then, as Dave talked about, bringing on the 3 individuals from Robbo and continuing to grow it, bringing on Nelson Powell, who's done a great job, Jay Smith, who's done a great job. But the North Carolina region, to go out of the box with nothing, and I'm not talking about Mount Airy, it's not included here, that's part of the Blue Ridge region, but to grow the loans to $200 million in a little over 2 years, and to open up a brand new office with all the pains and the agonies that go with hiring people, to build those 2 branches to $31.4 million is remarkable. And I know I talked about it last year, but a lot of credit goes to Eric Moore, who really, I can get mad pretty easily, and Eric's probably a much more level-headed person, and he was the real catalyst to go down to North Carolina to convince the North Carolina Banking Association to let us come into North Carolina, and I give him a tremendous amount of credit for that. The Agriculture Lending Division, I don't know what I could say, but thank you to them. They've put a lot of they've paid a lot of bills for our company. Keith has grown this division from basically nothing to a tremendous asset for our company, with over 28.11% of our loans in agriculture. Yeah, we've had some stumbles along the way, but Gene Copenhaver did a lot. There were a lot of people that have worked with Keith over the years, Bill, John, everybody, to continue to find a niche play for our company, and that niche play was agriculture, and it still is today. To be the 4th largest agriculture lender out of banks in the United States is a tremendous honor, and Keith and his group continue to build that group. I don't know where it will be 10 years from now, but I know one thing. I know the group that's there and their commitment to continue to do the right things and to continue to have that niche play for our company long term. So, North Carolina is just has been a really good area for us to continue to grow in. And I got to give a lot of credit here to Bradley Webb and Sophie. You know, when we went down there, we just didn't have what Trevor and Jay and Nelson, they're out there making loans, so we certainly didn't want them doing very much administratively. And Bradley took the challenge on and has done a great job working with that. And I also want to say, you know, Keith has been so instrumental in truly being a friend to me. You know, I get frustrated a lot, and some of these guys know it. You know, some of them know I can talk to them. They're not going to tell anybody that I didn't know what I was talking about. But Keith has always been a real friend to me, and I appreciate that, Keith. But Bradley's going to be the same. You know, he began leading the division in April, and Keith, he wanted to retire, and he has a self-imposed retirement of June 30, 2024. But I know that Bradley will always have a friend in Keith, and this agriculture division will continue to grow. And I get in a lot of trouble here because truly when you talk about it being 28.11% of our company, then you're leaving out 71.89%, which is commercial, mortgage, and all the other things. But they have done a great job for our company. Another area that fortunately for us, our mortgage lending area, our Senior Vice President, Regional Manager, Andy Puckett, has done an exceptional job. You know, interest rates are challenging, and Eric talked about it. You know, I'd have got up here and told you where rates were going to go, and I'd lied to you. But Eric put that out there early that I'd be lying, so I'm not going to try that. But I will tell you that Andy saw the future of the secondary market having a slowdown. And instead of sitting back and saying, oh, what am I going to do? Am I going to lay off all my people? No, Andy went out and built some new products along with the gentleman who he worked with, Rick Buchanan. They created new products to where they could go out and do in-house lending, and it's been a big plus to us. We didn't take on the interest rate risk because they're variable rate loans. And whatever rates do, Andy has the ability to continue to lead that group. And, you know, with the amount of 1 to 4 family lending we do, you've got to have a very strong person. And he is a strong person with a great team. Really proud of all the things he's done in the $94 million in growth. The wealth management division, you know, it's kind of personal to me on the wealth management division because I will tell you that I was in the room when we thought about selling the wealth management division. It wasn't making very much money, and we chose to go a different direction. We hired a young man who did a great job, came and helped us. But little did we know that our better man would be Scott Arnett, who would continue to take it forward. And it's remarkable that with the small staff that he's got, that he was able to grow that by $100 million in 2023 with his staff. You know, with assets under management increasing by $23 million or 9.4%. With $146.5 million in brokerage, primarily one lady, Angie Waters, who works, I think she's a consummate worker too. She works day and night, like a lot of our people, and continues to build that. And it's all relationships, as Raleigh talked about. But you can look at the net income, it was flat. But flat's a whole lot better than nothing. And we were basically at break even at one point. So really proud of all the work that group has done. But now I'll take you to where you really want to be, and that's our bank as a whole. And I love to do this slide. I was looking at Dave's little girl, and I was thinking about, man, if I had just thought about First Bank and Trust when I was little, I could have invested, or I could have found somebody to loan me $1,000. You know, I could have $716,000 today with the splits. Who would have ever thought it? And if you look out there, you can see the last 3 trades of our stock have been at 230 at 112, 15 at 112, 1,000 at 112. So, you know, our stock trades independently between buyers and sellers. Our company does not make a market in the stock. We're a closely held company. What we do, we're stockholders of record. We hold the record of who owns the stock. But these shares trade between individuals. And there is a remarkable number of people who want to acquire our stock. And I've got to tell you that our corporate communications officer, Breanne Green, does a great job with our shareholders. I'm telling you, I listen to her calls to shareholders and how she holds their hands when they have the unfortunate situation of a death, or however she deals with them. She's remarkable. And I encourage you that if you know somebody that would like to acquire stock that we haven't talked to or it's not on our list, to send her an email or give her a call, and she'd love to have that information. But fortunately, I'm not aware of any stock that's for sale right now. If you look at dividends per share, Eric talked about this. I just want to highlight the fact that once again, we have paid record dividends of $9.6 million in 2024, along with an 83.3% increase in stock appreciation over the last 5 years, 74.5% increase in dividends over the last 5 years. So we certainly appreciate you believing in our company, continue to buy stock in our company, or just holding the stock that you have in our company. But I've talked a lot about the past. I've talked about things that we've done. I've talked about people, which is really important to me. But I want to talk a little bit about where we've gone in the first 3 months of 2024. And you can see here that we have grown our assets to $3.389 billion. I will tell you that as of today, we're over $3.4 billion. That's about a $302 million increase over last year of 7.5%. We've grown our deposits. We have had a remarkable turnaround in our overall deposit growth because of all of our employees, what I call bankers, not just lenders, believing in the plan that Eric and Raleigh executed to be able to grow our deposits. And everybody bought into the plan and have worked tremendous for it. And you can see here that even with the things that occurred back in March of last year with SVB, the fintech bank that kind of went out of business, and all the things that hampered liquidity growth, all of the money going out of the economy, we've been able to grow our deposits by $283 million to $2.9 billion. And as Eric talked about, we're over $3 billion in customer deposits. And one of my favorite things is to tell you today that as of today, our loan growth from 12/31 of 2023 to today was $99 million. And remarkably, today, our deposit growth for these 3 months was $99 million. And that's what we have to do. When Raleigh talked about core deposits, when Eric talked about core deposits are what makes our company work. We have a tremendous number of deposits that our individuals leave with us that we pay zero interest on, but we provide the service. And those core deposits will continue to be extremely important to our company. Total loans, Raleigh talked about it, $419 million up from last year, $2.9 billion. If you'd have told me that, I just didn't believe it would happen, but it certainly did. Shareholders' equity. That's where you all come in. We've been able to continue to build the shareholders' equity to keep our company safe and sound, even paying out $18 to $20 million in dividends with $325 million of equity. But where there's all positives, there's always something that's a little different. If you look at the net income here, you say, oh, my lands, what's happening? Our net income is down from $12.4 million last year to $11.9. But there's a little story to this. We sold our old operations center and were able to record a one-time gain in January of 2023 after tax of about $767,000. So that one-time gain, if you take that out, our income would be up about $258,000. Some people would say I can always make the numbers work to my advantage, but I will tell you that it's a true story. So that's the other thing. People tell you it's true. Sometimes you got to worry. Loan growth, 2024. I'm getting close to the end here. Loan growth. You can see that our loan growth is projected to be $275 million. I told you that we've already grown $99 million in the first 3 months. Our deposit growth of $275 million. I've told you that our deposit growth is $99 million. Capital growth, we want to grow $33.8 million while providing an above average return to our shareholders. We want our return on average assets to be 1.51 and our return on average equity to be 15.68. And I know with the leadership of Eric and Raleigh and Sophie and Jim Edmondson and everybody else that works for us, Jim does a lot for us too, that all of that will happen in 2024. But as I talk about 2024, I can tell you that when I was a CFO for 20 years, Bill always challenged me to look out 5 years to see what we could do, and that's what he did. And he did a great job of leading our company and ensuring that we look to the future. So, you know, we're not going to give up our core values. You've heard that from Raleigh. You heard it from Eric. You heard it from Dave. And you hear it from me that we're not going to give up on high-quality customer service. We're not going to give up on trying to motivate our employees. And I know Eric didn't talk about it very much, but I think he did tell you that 70% of our increase in non-interest expense was salary and benefits. We were a leader in trying to pay a reasonable wage to our tellers. Bill and the board pushed that to $15 an hour way before everybody else started talking about it. So I really applaud what our company has done for people to have a way to make a living. Net income, you know, who knows what Eric's right. You know, you lie or you try to forecast out 5 years. It's pretty difficult. But if you look at it, you can see that we're projecting that the income in 2028 will be somewhere around $73.3 million. And don't think that's a stretch, because I can tell you that we are about 2 years ahead of where we thought we would be in the last 5 years. So I believe we will get there. The dividends per share of $3.37, you know, I think that's a given. We need to continue to reward our shareholders, continue to do that to be able to stay independent. Bill's goal was, and I agree with his goal was to be the last community bank in Virginia. And I can tell you, we've come from about 150 down to about somewhere in the 58, 57 range today. So he did a great job of leading that and putting us where we are today. And then earnings per share, I hope I live to see the $8.83 a share. Our mission statement has stayed the same. I can't remember when that was created, but I think it has a lot of great things in it that we look at and that means something to us. And that, as Raleigh talked about the credit investment and the financial services of our community, making sure that we're providing the products that are going to be leading edge and that we can continue to do that. And providing our shareholders with an above average return on the investment. And I'll tell you, one of the proudest things on the deposit side that I'm proud of Eric for is that one of the things I wanted to do was to go to variable pricing on the deposit side. And he was able to create a money market account that has really helped us to continue to build our deposit base. And without that, we've got about $1 billion in money market deposits. And all of those dollars are going back into our communities, and they're being reinvested, and they're helping each and every one of us have a better place to live. And Eric was the architect of that. But, you know, my last thing for me is it's been a real blessing for me. But, you know, with everything, there comes a time when it's probably your time to kind of think about stepping aside. And I'm going to do that tonight with the board. I'm not going to step aside, I hope, in a short run. I hope that it'll be a couple years. But I have to tell you that this company has so many smart people that could step up and do what I do every day. And, you know, I'm going to enjoy the fact that I don't have to wake up in the middle of the night and worry about the 450 families. I'm going to enjoy the fact that I can just do something different for the remaining part of my life. But I do appreciate I appreciate this board, and I appreciate every single employee of this company that puts up with my little ways of doing things. And, you know, Rhonda is here tonight, and Rhonda was one of the first people to put her arms around me and kind of say, hey, you can do anything. Just go out there and do it. And I appreciate you. That's
This is a well-oiled machine, but it's complicated too. And like Mark says, you got to wake up during the night worrying about all the families getting adequately compensated. You know, it's a lot to think about. Our canvassing committee has been out, and Eric, if you have a report from the canvassing committee, please. Thank you, Eric. Great job. Well, we can declare then that we have a quorum and we're duly in session. In accordance with the Article 4 of the Articles of Incorporation, the stockholders will vote to elect directors of First Bank Corp. In staggered terms. Directors under First Bank Corp. Incorporated are designated as Class A, Class B, and Class C directors. The Class A directors that are maturing this year would include myself, David Leonard, Mark Nelson, and Trent Yates. So the floor is now open for nominations to replace or to re-elect those three directors. Thank you, sir. The directors be set at 9 for the holding company, right? Do I have a motion? Do I have a second to that motion? Second. Okay, all in favor of that, setting the directors at 9? Opposed? And Raleigh has made nomination of these three directors to serve through 2024 for the 3-year term. We have a second to that motion. And a second. If there are no further nominations, are there further nominations for those positions? If not, all in favor of electing those three directors in by acclamation, let it be known by saying aye. Those opposed? As we fixed the number of directors, Bill, I'm about to get ahead of myself here. Here we go. Okay. Then, is there other business to come before the meeting? Have a second to that motion? And a second? All in favor? Opposed? That's always a relief. We like our work to be approved and not have objection, but with those numbers, I guess it certainly is. Thank you. I would like to just make a couple of closing comments. Matt Linder, who's in charge of our technology at the bank, came to us, Mark hired him 4 or 5 years ago, I guess. Matt was in charge of technology for a $12 billion bank. he came to us, and we had good technology. Things were working well, but Matt has taken us to new levels. I would say that our technology within the bank, computers, et cetera, it's one of the best in the nation. And Matt, we appreciate what you've done for us there. And I'll tell you, you know, you can push a wrong button sometimes and lose $100,000 or $2,000, and we've come close to that a few times. And Matt does a great job in leading that technology company. We're in the business of buying and selling money. And of course, we like that margin that everybody's been talking about. But customer service has to come with that. Now, I made a statement a few minutes ago about the youngest stockholder being here. I believe Raleigh, your daughter, I don't know if she's here or not, but we may have some competition in that department, and that'd be good. So there's another thing that I've talked about when we go to different areas and talk about how the bank operates. You know, we have some troubled loans now and then. Not the fault maybe of management and the people that own those companies, but sometimes the worm turns the other way. And a company can be in trouble through no fault of the management and what's happening in that company. When that happens, rather than taking that company to the courthouse steps, we try to work with an individual that has the worm turned against him, so forth, and try to work out things. We think it's better for the bank, it's better for that individual, because that individual knows more about how to straighten that company out than we do, so we work with them and try to do that. To tell you a good example of that, and I've used this a few times, we had a farm get in trouble, and it wasn't his fault. The loan officers had done everything they could to work with him, so it comes up to an auction. And the auctioneer is on the stand, and the owner gets up and he says, "Hold on a minute, Mr. Auctioneer. I've got a statement to make." Now, this gets close to me. I've been there close myself. But he gets up there and he says, "Things have turned against me through no fault of my own, but First Bank and Trust Company has done everything in the world they could to save me. Now go ahead and sell my farm." That gets to you. Now, you talk about loans that Raleigh was talking about. $400 million growth in loans, Raleigh. That's not the full story. The full story is you got the payoffs and everything. So these loan officers, you and everybody, have got to make $1.1 billion in loans to make that $400 million growth. So that's quite a chore. Well, ladies and gentlemen, I believe that's about to conclude our meeting, except that I have an announcement to make that I think some of you would like to hear about. It was mentioned at the beginning of the meeting that our stock is split 2-for-1 7 times. And many have mentioned now that the stock is selling again for $112, $115 per share, that it might be time to make another split. Your board has voted to make that split, so that'll be 8 splits in 45 years. So that would be an average split for 2-for-1 every 5.6 years. Now, if you purchased 1 share of stock in 1979 for $20, that's now going to be 256 shares. And that $20 is going to be worth $14,336, plus the dividends that you've received. So your board has approved that, so effective May 29th or June 1 of 24, you'll be issued another stock for each one you own. And Breanne Green, that Mark has talked about, does a tremendous job, and she'll be doing the work and putting all that together. And shortly, sometime in June, you're probably going to receive a red envelope, no pun intended there, but a red envelope with your extra shares in them. So happy times. And again, I say, with all the growth we've made and the people we've served and the good we've done throughout communities, throughout our footprint, that we have just scratched the surface. So now, I will adjourn the meeting on that happy note. Now, we've got a little more thing coming up here after the adjournment. soon as I get the